Hello, my name is Boaz Sobrado, and welcome to another episode of On the Margin with my co-host Alex Kidwell. And today we have Stephen Fallon, who is a writer and commentator on many current affairs in politics, in economics, in finance, with a very, very interesting background. We're hoping to talk to him a little bit about how the international financial system is organized and the elements of international relations that impact it. So first of all, welcome, Stephen. Stephen, before we start discussing the nitty-gritty details of the international financial system, why don't you tell us a little bit more about your background, about who you are, where you started working, your professional history, and we can move on from there.
Happy to. So I, like many people who sort of grew up, I suppose, in this sort of generation of mid-millennials, I graduated in the middle of a financial crisis, the last one. And I saw that there was some interesting opportunities outside of Europe. And I spent most of the 2010s over in Dubai, kind of dealing with things mostly in the Middle East, traveling around that part of the world. And one of the paths that took me on was to work in the forensic investigation team of EY, the professional service provider. And throughout the mid-2010s, I worked on a number of very, very interesting projects there, dealing with kind of compliance, building kind of frameworks for large institutions and corporates in the Middle East, but also on a number of investigations, things in sanctions, money laundering, fraud, what have you. And so really sort of a practitioner of the on the delivery side of financial crime compliance.
Okay, and let's take a pause there. What does a forensic investigator do? Because other than sounding really cool, people might not actually know what a financial investigator does.
Yeah, that's a good question. So traditionally, the way that, if we take a step back, one of the big issues now we see in financial markets is the issue of so-called bad or failed audits, where some very large publicly listed company will fail, and everyone would sort of say, "How did we miss the warning signs of this? Where are the auditors?" And often when it comes to the audit, they're not looking for non-compliance of particularly things in financial crime. And depending on the market you're in, it's more of a confirmation that the company is financially healthy. Now, a forensic audit is a little bit different from that, from your conventional external audit. So it will usually be called in, often internally by someone, to sort of examine and find out what is going on because someone suspects there's some foul play. Money is missing, something doesn't quite make sense. This can be driven by other stakeholders, potentially shareholders or things like this, but often it's sort of internally driven, and they will bring in people who specifically look for problems. And they will typically be people who are trained as accountants, but who have, let's say, a bit more of a meticulous sort of mindset. And they will look through the financial records to look for problems, to look for things that don't make sense, for things that do not add up. And so my observation was that for the most part, I was quite good at this non-financial side of explaining, or I should say the non-quantitative side of explaining the story. And I found most of the larger narratives of what was going on inside some of these money laundering and sanctions cases very, very interesting. And after a while, particularly when they're driven by regulatory events, you start to observe some patterns, and you start to become interested in what is causing all of these investigations to occur. And throughout the 2010s, the sort of the leading issue in financial institutions was money laundering and sanctions evasion pertaining to Iran, sometimes North Korea, and Syria. But overwhelmingly in the Middle East, it was to do with Iran.
Stephen, you've had some really interesting experience at INSTEX. I hadn't heard of INSTEX beforehand, but it seemed to put you right at the heart of the sanctions war between the US, Europe, and Iran. Can you talk a little bit about the experience that you've had and paint like a broader picture of what was going on economically and politically and your role within that?
I'll try to. It's a complicated story. It's very, very emotive for many people. Essentially, there was an agreement, but not a treaty, struck towards the end of the Obama administration. So we're talking kind of 2015 period, after 10 years of negotiation, whereby Iran would agree to allow UN inspectors to view, visit, inspect nuclear-related sites around Iran, and agreed to a bunch of quite technical safeguards being in place to reduce the amount of uranium being produced. The enrichment level is, again, quite wonky, nuclear-related kind of specificities. And in exchange for doing this, there was supposed to be relief from most financial and economic sanctions. And that worked relatively well, although banks for a number of years sort of hedged and didn't think the deal would last. And many of the larger ones did not lean into the deal. And that was also because there were some remaining sanctions which were not removed, which made it complicated for banks with a lower risk appetite, shall we say, or significant US exposure who just did not want to sort of play in that field, who did not get in. And then in 2018, 15 or so months after Trump had been elected, he withdrew from the nuclear deal. And that sort of started a number of problems for the other remaining signatories to the deal, which was that they had committed publicly to sort of upholding their side of the deal. But effectively, you had one party who now stepped out of the deal trying to deconstruct it, trying to break it. And that really put particularly Europe in quite a awkward position, because they have the strongest and largest ally they've had since 1945 proactively trying to sabotage a deal to keep Europeans safe. And at least from where I was sitting at that time, initially in Dubai and then later on in Switzerland and France, it didn't seem like that was terribly constructive. And so I wanted to see what could be done to maintain this deal, because I thought that it had value and it kept me and people I love and my family safe. And the idea of having another nuclear armed state or breakout state on the brink of breakout did not fill me with much joy. So I ended up working for INSTEX, and it was eye-opening for me, because it really...
Can you quickly describe what does INSTEX do, sir?
INSTEX was a privately owned company, privately incorporated, I should say, company based in France, owned by, at the end, it was owned by 10 shareholders who were a collection of European countries. INSTEX was designed to facilitate financial payments between European companies and Iranian companies, both for imports and exports, by acting as an intermediary. However, because it was not a bank, it had to rely on the financial plumbing of other financial institutions.
So what was the role of INSTEX caught in between these difficult political situations between the Western powers versus the US and Iran, and you found yourself in the middle?
So it's worth recalling that INSTEX was owned by these European governments. So effectively, we were the commercial element of their foreign policy. So there was that sort of, we were operating underneath their umbrella, which is good because that afforded us some degree of protection. However, what we found is that in our own interactions as INSTEX with the private sector, is that the private sector had effectively been, in some cases, intimidated. Mostly the tone had been set, however, during the previous 10 or 15 years by the US during successive waves of fines and punishments and sort of norm setting towards certain countries like Iran. So it was very hard for us, because we would be approached by companies who would want potentially hundreds of millions of euro worth of trade. I can think of a number of large Scandinavian pharmaceutical companies who wanted effectively to trade at this range for many, many years. And we would not be able to finance this because we were not set up as a bank, so we could not provide credit. So we were limited in what we could do, which was effectively be a matchmaker between different trades, some in Iran and some in Europe. And it was complex, because whenever we would have to engage with banks to actually move money around on behalf of these non-financial customers, banks would be very, very reluctant to engage on this, because they would say that it did not conform to their risk appetite. In some cases, they would acknowledge that it was completely above board and completely legal. However, it was not in their risk appetite. So it was quite tricky sometimes.
So walk us through this example. I'm a Scandinavian pharmaceutical, hopefully with minimal exposure to the US markets. I want to do trade in Iran. I found a willing buyer in Iran, everything's ready. There's a buyer, there's a seller, contracts are signed. I approach INSTEX, which is owned by 3 European governments, and I say, hey, I want to trade with Iran, but obviously my bank won't let me. It won't let the Iranian partner wire me money. So how do we do this? What are the next steps, and where do things get stuck?
Good question. So the first question I would ask myself as putting on my chief compliance officer hat is, who is this Swedish company that's approached me? Am I comfortable with who owns them? Am I comfortable with who is in charge of the management? And am I confident, after my own research, that what they're trying to sell into Iran is compliant with European law? So assuming I've satisfied all of these, my next question is to understand who their bank is. Where do they keep their money? And the first kind of suggestion I would make to them, once I've done my own sort of initial onboarding due diligence of this Swedish customer, is to say to them, have you spoken to your bank? How do you intend to get paid for this ultimately? Because you will want your money, after the entire trade is complete, where do you want your money to be deposited? And if they said, yes, I would like to have it in my home bank, who I bank with for all the rest of my trade normally, then the first thing I would say is, then you need to go and have a conversation with your bank and understand if they are comfortable receiving funds, which are the proceeds of trade with Iran. Often what we'd find is that they would go away, have that conversation, they would come back to us and say, we spoke to our bank and they told us that if we attempt to receive funds related to an Iran trade, they will offboard us as a customer. Despite the fact that under Swedish or European law, the trade was completely compliant with the law, and there was no reputational risk, that they were, in the sense that they were comfortable with that, any reputational exposure to their Iranian importer. Now, obviously, the Swedish firm would need to understand who the Iranian importers as well. So we would also do some due diligence on who owns them, who controls them, going back several levels to make sure there's no sort of hidden or obscured ownership structures that were opaque, which is often the case in Iran. And also that in some cases there was no risk of, or I should say rather an acceptable risk of, the goods once in country being given to someone else or sold to someone else who is sanctioned. I mean, there's no point saying that you've done your due diligence on an Iranian firm if you have any reason to believe that you will sell the goods and then they'll end up being distributed by, I don't know, the Iranian Ministry of Defense. Because even if it's for sort of humanitarian purposes, it would not have been acceptable to us to think that some kind of product or good that was imported into Iran would then end up, sitting in a barracks somewhere with the Iranian military. That's not acceptable.
Okay, so then to take this example further, the Scandinavian company talks to their bank. Their bank tells them, what you're doing is perfectly legal based on Swedish, European, whatever law. Nevertheless, if you try to do this, we will offboard you as a customer. Did INSTEX have any way to convince or persuade the bank, or have any banking relationships with perhaps other banks where they could say, well, that bank might not want to do it, but this other one would perhaps be interested? What solutions could INSTEX offer in this case, or was it the case that there were just no solutions that they could offer for these companies?
Look, this is a great question. There are always more than one way to skin this problematic cat. So initially, you would sort of try to understand what the pushback would be from this theoretical Swedish bank, and typically that would be something along the lines of a slightly woolly statement, saying something like, "It's not in our risk appetite," which is it's a very nebulous response, because and you can try to read between the lines and what that means, and usually it means we don't like the Iran exposure. So there's a limit on how much you could sort of push back on that, because depending on the size of this customer, if we're talking about a publicly traded company that's systemically important in Sweden, that relationship that they maintain with their bank would be important to the bank. The bank does not want to lose that customer. However, if we're talking about some small SME that sits somewhere up in the Arctic Circle and has 5 employees, they have a very different relationship with their bank. in Stockholm. Very, very different. They're inconsequential. And often the problem we would find is that even asking this question to a bank triggers alarm bells for banks, where they would then maybe even conduct a client review of their own to make sure that this customer is coming to them and saying, "Can I do this perfectly legitimate trade? But I mentioned this word Iran, which sets alarm bells off." They might then actually conduct a review and say, "Well, what else have you been doing in the Middle East? What else have you been? Where else have you been selling things to?" So there's often unintended consequences you have to be careful of. Now, in terms of what we could do as INSTEX, we collected towards the end of our lifetime, we collected a number of banks, not in Sweden, but in some other states in Europe, mostly in Germany and in Italy, where we could direct potential customers to go and speak to a bank and be onboarded, where we knew that some banks had a healthier risk appetite to this sort of trade. Now, the problem would be that often for the Swedish manufacturer, the Swedish exporter, is that if they were content with having their money finally end up being deposited in a bank in Germany, and that worked for their own sort of financial construction, that would be great. They would just know that they could conduct all the Iran trade they wanted as long as it was compliant, but the money would always come to rest in Germany, not back at their home bank in Sweden. And some banks would set up structures and mechanisms. Not banks. Some companies would set up structures where that would work for them. They could pay their payroll from Germany. They could pay their electricity bill from Germany, whatever. But they would sort of understand that they could never get the money back to Sweden.
Stephen, when INSTEX was launched, I found quite a few articles, like, for example, this article in 2019 from France 24. The headline is, "Europe sets up Iran trade mechanism to bypass US sanctions." There's a lot of commentary around de-dollarization, around the increasingly lesser importance of the US dollar. Yet now in 2023, there was a press statement by the British Foreign Office saying that INSTEX will be closed because, for political reasons, Iran, quote, has systemically prevented it from fulfilling its mandate. What happened here? And can you perhaps place it in the sort of more broad geopolitical context of, there's this concrete small example of one exporter in Scandinavia that is European, international banks, etc. But where does it sit within the larger context of geopolitics?
INSTEX was announced to unbelievable amount of fanfare in early 2019. And I think that the one critique I have of anyone in Europe is that expectations should have been managed better. Because when you set the bar here and you don't deliver at that level, everyone's going to be disappointed. So I hope that the lesson was sort of collectively learned on expectation management. Now, I've always, coming from a compliance background, I've always refuted any of these sort of terms that a lot of the press were a bit loose with using words like bypass, evade, circumvent. And I can assure you that when I was the chief compliance officer there, I did nothing of that nature. And the way I would frame it is that Europe was consistent. Europe maintained its part of the deal. The US was inconsistent. I understand why they were inconsistent. That was to do with their own sort of political requirements internally. But Europe effectively made a pledge to do something and then wanted to follow through on it. And Europe defines its own legitimate path. It will not have other people imposing their vision of how we should behave on us. And I think that's a very, very reasonable position. I don't think, again, if the shoe were on the other foot, that anyone in the US system would accept Europe imposing its vision of how the world should work on the US, or neither do I think that China would accept that kind of behavior.
So, Stephen, in your thesis, you write about financial warfare and you also define it. What is the definition you use?
The definition I have proposed in my thesis is financial warfare is present when actors employ methods that restrict, block, or deny access to money and all financial products by attacking the means of producing finance with underlying coercive, punitive, or lethal intent. The way I like to look at this is that we have not arrived at some sort of magic moment now where financial warfare has appeared. It's existed throughout history in other ways. However, the sort of to my mind, there are 2 or 3 factors that have really led to it being a sort of a standalone element, not just part of economic warfare, but sort of adjacent to it and separate from it. Of course, the two are interrelated. One is the centralization of some financial nodes in the global economy. The first one, the most sort of historically important one, being the emergence of London and in the late 19th century as a financial sort of center of gravity. Now, with World War I breaking out, that really broke down. However, the pound in London has sort of lingered on as being financially very important, but it's no longer the center of the sort of the financial world. The second step that's very important is the emergence of New York, without any peers really, as the sort of financial center of gravity for the world, and the emergence of the dollar and the dollar system more broadly towards the end of the 20th century. And that really took off beginning in the 21st century as it relates to this story. With one is the sort of the lack of an alternative, and this is always a big one that people come back to when people pose alternatives to dollar. The big question is, what is the alternative? And at present, there is no alternative. So the dollar remains on top. The second point would be that there, until the emergence of China in the last 10, 15 years, really as a peer, is that from approximately 1990, there was no other kind of rival superpower to even challenge the dollar or challenge the US system more broadly. Not that the Soviet Union ever wanted to be a financial or economic powerhouse, but particularly in the financial domain, it was never a peer. And then also reluctance of other states, particularly in the Eurozone, to really want to take on this position at the top. So what that means is we have a state that has sort of a unique distance from any other peer, the ability to control its currency, who uses it, and when and where. The other ways of looking at this, I suppose, what we see is that from 2001, the United States becomes more and more comfortable with adding financial warfare as sort of another element to its political, diplomatic, and military sort of national strategy. And that from about 2001 onwards, we see the US using financial warfare to target the funds, movement of money of non-state actors, namely the Taliban and Al-Qaeda, but also sort of other Islamic terrorist groups. Now, what's interesting is that around 2005, we have a number of people inside of the national security system more broadly thinking about other ways to sort of rein in, as they would phrase it, states that they are not happy with the behavior of, namely Iran and North Korea. And they start applying some of these techniques and methods that they've been using against non-state actors to state actors. And this really becomes very interesting, because what we see is them thinking, oh, we've already used these weapons or these tools to target these actors. How can we apply this? And what we find is that North Korea, it was relatively easy to sort of strangle, because from a financial perspective, from an economic perspective, it's not a particularly sophisticated economy. Mm-hmm. It has a very limited number of exit points into the rest of the world. However, Iran is a much more interesting case, because it's much more sophisticated, and it has better integration and interconnectedness with the US at that stage, and then also with Europe and some other economies in the wider Middle East. So I focused on my dissertation on looking at Iran, because really it's a much more interesting case on how the US can target a state that is already connected with the rest of the world. And looking at the period from 2005 until about 2012, what we see with financial warfare is that the US really prioritizes attacking the means for Iran to make money, mostly oil and gas, but also the places where Iran can deposit those funds or accumulate them in any way and move money around. So it's attacking both the creation and and then the byproduct of economic output.
Okay, so if I understand correctly, financial warfare becomes possible with the centralization of finance, first in London, then in New York. And once it becomes possible, it starts getting applied significantly after the 2001 terrorist attacks. The Americans discover that they have this tool in their arsenal and they're willing to use it. What does this financial warfare look like in practice? What are some examples of financial warfare and how are they technically structured?
So, I- as I see it, this is quite an interesting space, because what we see is we see a reluctance among a lot of policy officials to call this warfare. We'll hear a lot of and read a lot of euphemisms, people calling these tools, calling these, describing them with sort of DIY and tool-based metaphors. But in my opinion, at times this definitely looks like warfare, and it sits sort of somewhere, if you can imagine, on a sort of the sort of spectrum of force, or sort of the political spectrum, as somewhere beyond sort of diplomatic reining in, but somewhere just before the use of kinetic force, bombs, tanks, bullets, and it sits just on the edge of this. So it's definitely sort of an escalatory step. Now, in terms of what this looks like, it can be quite broad. It can be predominantly it's conducted through a concept called lawfare, which is the application and the changing of laws, norms, rules, and sort of in a more legal and sort of regulatory sense, to target states who are undesirable or are in some way misbehaving, as the US sees it, or other states who use these methods. This can be by use of financial sanctions, anti-money laundering rules and laws, designation of actors as counter-terrorists, as terrorists, and therefore applying counter-terrorist financing designations. And then in the case of Iran and North Korea since 2005, also as nuclear weapons proliferators. So they would be designated and targeted, so anyone who works on their behalf, as a counter-proliferation finance rules, laws, and designations. Now, there's also a slightly more ephemeral and slightly unclear aspect to this, which is the advantageous shaping of international norms and perceptions in a more informal way, so that people and international organizations more favorably sort of align with US or Western values.
Mm-hmm. So there's all these rules and norms that get created within financial institutions that are ultimately, in your opinion, designed to promote some sort of financial warfare. And there's a wide range of NGO-like or international sounding organizations that further this. In your thesis, you mentioned the Wolfsburg group. Can you tell us a little bit more about these players and how they have arisen and what their role is within the financial warfare ecosystem?
Of course. Yes, the Wolfsburg Group is an interesting group because they are not an international organization in the sense that there is no sovereign connection. They don't belong to a particular state. What they effectively are is they are a collection of the 10 or 11 largest banks in the world, global banks, mostly European and US, with one or two other Asian banks being a member. And they are effectively banks policing themselves. And the way that they do that is that the writing was on the wall for them very clearly by the mid-2000s, late 2000s, with regard to sanctions and some anti-money laundering legislation, with organizations like the FATF and countries like the US unilaterally sort of trying to stamp down on evasion of sanctions, non-compliance on evasion of sanctions laws. And these banks sort of got together and said, well, if we don't start to self-police, someone will do it for us. So, better we proactively do this. So effectively what it is that the Wolfsburg Group comes together periodically, either virtually or physically, and they agree on setting common standards for themselves. And these banks represent about 65 to 70% of all banking transactions on a daily basis. So they are the majority of banks in terms of activity. There are tens of thousands of banks globally, but what I mean is that in terms of actual activity, if we look at this by transactions, volume, by profit, turnover, if we look at this by deposits under assets under management, these banks really are the most important systemically. And as a result, what that means is that so long as they or the majority of them agree on something, that becomes the kind of de facto the standard. And then once they say these are our expectations of anyone we interact with and how we behave ourselves, and then they sort of disseminate these expectations to other smaller banks who need to remain in good standing with them, because if they do not remain in good standing with them, these larger banks, JP Morgan, Bank of America, Citigroup, Barclays, HSBC, to name half of them, if they take a bad or an even negative view of you, they will simply stop transacting with you. And that can be the kiss of death for smaller banks who need these larger banks to move money around to markets they do not have representation in or don't have a direct link to. Now, one of the ways that these banks who are members of the Wolfsburg Group do this is that they do a thing called an exchange of questionnaires, which is, as I said, they've agreed on sort of standard terminology and a list of questions, several hundred questions. And periodically, about once a year, these banks swap questionnaires. I'll give you my homework on how I behave. You give me your homework on how you behave. And you sort of say to me, this is how I run my bank, and this is how you run your bank. And then I'm more comfortable. I understand you and you understand me. And I'll ask, quite detailed questions, and you'll say, Boaz, please explain to me whether or not you have an existence of a policy on PEPs, on politically exposed persons, or do you have money laundering rules, regulations, and policies internally? And if you do, please can you sort of define them for me at a high level, so I'm comfortable that you have, inside of your bank, which is a bit of a black box to me. I understand that there are some rules and there are some regulations of how you behave. And then I'd like you to confirm to me that anyone else that you interact with, any other third bank, you also pass on this expectation to them.
So there's a Wolfsburg Group, the top 10 biggest banks that meet up in the castle in Switzerland, and they come up with rules and they share questionnaires with each other with regards to how they adhere to these rules. And then these rules get cascaded down to smaller banks via correspondent relationships, right? Because for a small bank, they must have a correspondent relationship with at least one of these large banks, right? Can you talk a little bit more about how that works in this example that you mentioned with questionnaires? I'm a small bank. I wish to do business with people that are perhaps riskier than big banks to be comfortable with. Nevertheless, I still need to follow the Wolfsburg Group rules, etc. How does this work?
So you use the word cascade. Cascade is a great way of phrasing this, because what this effectively is the dissemination of norms. And this is, these banks, in order to understand you as a smaller bank, would like you to give them some degree of comfort on what you do, who you interact with as a bank, and in turn, what funds are coming through your bank, what kind of customers, what kind of clientele you interact with, what kind of financial services you perform, and what markets you're present in. And effectively what this is effectively trying to rule out risk. Now, it doesn't completely get rid of risk, but it helps me as JP Morgan to feel much more comfortable interacting with you, because I know that there's nothing wild going on inside of you if I believe you on this. And I suppose there is some element of good faith on this, where I assume that you're not going to lie to me, because I know that if I ever find out you're lying, I will simply never interact with you again. Now, you're a small bank, and you're a bank from the Dominican Republic, a slightly smaller market. And you know that you want to perform payments on behalf of your customers in dollars. However, you are a bank, you are based in Dominican Republic, you have no footprint inside the United States, you are not allowed to issue dollars, you are not regulated by the United States. You require any payments effectively outside of the Dominican Republic to come through me, because people don't want Dominican Republic currency if you live in Mozambique. That's basically useless. What you want is a major currency, and the largest and most major currency is the dollar. So in this situation, you require me to effectively act as a middleman, and you need to send your payments through me to get to Mozambique or Mongolia or Papua New Guinea or anywhere else in the world. And you know that I have a presence, because I'm a global bank, in most of these countries. And without me, you are effectively isolated, and you would become a very, very small network of anyone else who is comfortable working with you. And so what we see is that, particularly since the financial crisis, is that the number of correspondent banking network nodes has really reduced by about 25 to 30%. And what that means is that these global banks play an even more important role than they did 15 or 20 years ago, because fewer and fewer of these smaller banks interact bilaterally. They go through these big boys, and they need these big banks to wire payments on their behalf. And while this is quite, it's not the most glamorous or interesting of activity, it's incredibly necessary to the running of the financial system. Because what it means is that you, as a small bank from the Dominican Republic, can sort of pre-position funds in my bank. And you can say to me, every time someone, one of your customers needs to make a dollar payment, you can ask me on your behalf to release the funds I'm holding, your funds in, this would be your Nostro account in my bank. And in exchange, I will have funds in your bank, which would be Vostro. And then we will effectively sort of balance out who owes who money. What's very interesting about this is that what we see is that really emerging since about 2005 is that the United States is able to say to these larger banks, most of your business day to day is conducted in dollars. You need me more than I need you. If you're going to use US currency, that comes with some strings attached. And I expect you to pass on those requirements to anyone else that you interact with. And so use the word disseminate a few minutes ago, or cascade. This is effectively these sort of rules being cascaded down from the United States to the global banks, to the sort of second and third tier banks, and then down into the sort of non-financial economy of customers and non-financial businesses.
That's really interesting about everyone having to conform. Do you have any examples of non-American banks, like large European banks or banks outside of America, who've had to change their ways or conform to American ways of working?
Yes. I think the most obvious one is HSBC. If you look at the terms of HSBC's settlement agreement with the United States from 2012, one of the requirements in this agreement is that at all times in all currencies with all customers, the HSBC agrees to apply US anti-money laundering rules. So what does that mean functionally? If you walk into a HSBC office in Hong Kong and you attempt to make a wire payment to someone who is on a US sanctions list, or in some way this transaction is not compliant with US anti-money laundering rules, you may be physically standing in Hong Kong. And again, the jury's out on whether or not that is a part of China or not, depending on who you speak to. People consider it to be or not to be. But the point is, as soon as you attempt to make that transaction through HSBC, if you will, sort of by this kind of magical process of the agreement that HSBC arrived at 12 years ago, you are playing by US rules. So you might be trying to move pounds from Hong Kong to London, but because it goes through HSBC and HSBC has agreed in exchange not to be prosecuted for malfeasance in the past, HSBC agreed to play by US rules. So functionally speaking, the payment goes to the United States.
So when America was sanctioning Iran, what kind of tools or weapons did they use, and what were their aims when using these tools, and did they achieve these aims?
So what we see from about 2005 to 2010 is that the US designates everything of consequence to the Iranian economy as subject to primary sanctions. And what that means is that anything where there is a clear and under sort of US definitions, a nexus or a touch point with the US directly, it's sanctioned. The interesting part is how the expectation of other states and other countries sort of gets captured by this orbit of so-called secondary sanctions. And what that means is, Alex, you are in London today, and I'm presuming that you are not a US national or a US person. However, what this would mean is under US law, if you attempt to make a pound payment to an Iranian bank, I, as the United States government, take exception to that. And I tell you that even though it's not in my currency and the goods have no US components to them as I deem them to be, nonetheless, I do not want you to perform this kind of trade with Iran. And if you continue to do this, I will designate you as subject to secondary sanctions. And what that means is anytime that you attempt to directly engage with part of the US financial system or the US economy, no one inside of that system will want to do business with you because it will be illegal for them to do it under US law. So effectively, I'm giving you the mark of Cain and saying, if you break these rules, if you break these expectations, you will also you can go and be in that camp. And that's quite a powerful way to move people. And we've seen that from the 2010s onwards, this has become a more and more effective way to designate people and to induce them to move away from certain countries. So you asked your question, which was, how did the United States do this to Iran? Initially, it did this by directly labeling them parts of the Iranian economy subject to primary sanctions, but more and more, it effectively required other actors, third parties, to also pick a team. And overwhelmingly, people picked Team USA.
Did they actually achieve what they tried to set out with these sanctions?
That's an interesting question. What I would say is that sometimes the goalposts are moved. We also have to consider which time period we're speaking about. During the period from 2005 until 2015, yes, overwhelmingly, the US system achieved what it wanted, which was to not allow Iran to become a nuclear power or state just on the cusp of breakout. And that worked. Iran came to the negotiating table. A deal was reached 2015 and implemented until Mr. Trump withdrew from the deal. Now, during the Trump administration from 2018 until 2020, the aims of US sanctions changed. What we saw effectively were these famous 12 points that the Secretary of State, Mike Pompeo, set out in a speech explaining to the Iranians what his expectation of was from them in order to have maximum pressure removed. However, I think it's fair to say that the way that message was received by the Iranians and by everyone else watching this was that it was effectively asking for Iran to concede and throw in the towel and just conform to all US expectations of behavior. And Iran did not do that. So my only conclusion is, no, the Americans did not achieve during the Trump administration what they wanted. What's an interesting point, though, is that this put such a high degree of sanctions in place on the Iranians is that when the Biden administration came in January 2021, they did not remove most of the designations. Perhaps there was a few people who came off the list, a few entities, but overwhelmingly the sanctions stayed in place. So we've effectively had this this wall of sanctions that the Trump administration put in place, and there it remains. And as a result, Iran, for the most part now, is effectively cordoned off from the rest of the financial system. And no one, for the most part, apart from some Chinese, a few Indian banks and some Russian banks, does any trade with them.
Is there a risk that the US overplay their hand? So they have incredible power in controlling the financial system. But if you go back to financial weapons and sanctions too many times, there is a risk that you push your adversaries into alternative hands, like partnering with the Chinese or partnering with North Korea or whoever it may be.
So I'll come back to a point I made a few minutes ago, which is that until there is someone who is willing to step up and propose their currency as an alternative, I cannot see that happening. And I think that forecasts on the demise of the dollar are wrong for the time being, as I see it. There may be alternative ways of storing value with all sorts of interesting things in the crypto space. But in terms of a day-to-day currency for trade, the dollar is king. And I don't see it going anywhere. What I could see is from allies and potentially states that the US is not directly hostile to, is I could see some degree of pushback on the margins about the US overplaying its hand. However, I think that there is still considerable space for the US to use the dollar system to its benefit. The number of times where the United States and, say, for example, the Europeans or other Western states have not aligned on sanctions policy are few. And really the approach taken particularly by Europe, is that on the one in 100 occasions where there is a significant disagreement, that they will muddle through and wait for a change in US policy or find some sort of way to make it work. Unless this becomes a much more regular, much more frequent occurrence, I can't see enough states sort of forming any kind of coalition to propose an alternative. So I think there's a lot more space for the US to continue doing this.
It looks like we're a few months away from a potential Trump presidency in 2024. Do you think if he is elected that these trends of economic warfare and sanctions will accelerate?
Yes, I do. And I think that it will accelerate for two reasons. One is that he's tried it in the past and he's seen that it works very well. And so have the people around him. And interestingly, during the Trump administration and then during the next 4 years of the Biden administration, there were no significant steps taken to sort of come up with a remedy for this, either to sort of be able to push back with some sort of form of deterrence, nor was there a way for states to come up with simply making their own system more autonomous and sort of functionally saying, you can do you, we're going to do us. What you do is basically irrelevant, and becoming more sort of independent, if you will. So in the absence of autonomy, the absence of deterrence, I can't see there being any reason why the Trump administration would not continue with this. It's been an incredibly effective policy. And what's interesting about it is that it's such a cheap policy to roll out. You just need a few people from a couple of the agencies to work together to sort of set the tone of the big banks who are already in place. They're already there, ready to go, primed, put them in place, and sort of the rest of it cascades down to the financial system. And I think that whenever there is a moderate to large degree of a cleavage in policy between the Trump administration and any allies, we will see this play run again and again and again. And I expect that during the Trump administration, this will happen continuously because it works very, very well. It's very hard to block. And while there are more points in common with the Americans, people will just have to accept it.
If I think of it in terms of from the perspective of a European or Asian large government, now I can see that a small country like Dominica probably doesn't have a lot of options here. But if I put myself in the perspective of a large European government or a large Asian government, it is probably a bit irksome to have my financial institutions follow US rules, because at the end of the day, US rules are going to favor US government interests. So that would probably annoy me a bit. But also, it seems like it's relatively easy for large governments to overcome these difficulties if there is significant political will. The European Central Bank could open some sort of correspondent banking relationship with the Iranian Central Bank, and then all of these problems would effectively be overcome because the US is never going to sanction the European Central Bank, right? So my question to you is, have you heard from regulators some sort of first of all, like complaints around this? Secondly, has there been any serious effort to overcome these difficulties? Or do people just generally think, well, it's a bit annoying, but it's quite expensive to fight against it?
You're asking some very, very good questions, particularly from Europe. I have long, and the European financial system and the Eurozone specifically, I have long been amazed at the timidity of some people to wade into the sort of the politics. And I think that there's sort of a number of points here that sort of cause this. One is the fact that the status quo is that the United States is on top from the financial position, and sort of trying to build some brave new world probably fears people would dread. The way that we have sort of set up our systems in the last 50 years or so is that we favor the independence of central banks, and the idea that a politician in Brussels or Strasbourg could instruct someone who is a technocrat in Frankfurt to take a course of action to serve a clearly non-financial political end that's not to do with fighting inflation or somehow stabilizing the economy, that's an interesting question. And I think that there's some serious tension there with independence of central banks and some kind of government agencies, and addressing political necessity. And I think until people are ready to have that to sort of address that tension and say, we prioritize the politics over the independence of technocrats sometimes, until people are willing to do that, I think that this will continue in Europe. The second point is, and again, call me a touch cynical here, is that there is a very interesting revolving door of people working in government agencies, in technocratic institutions, who they'll do some time in an institution, understand how it works, what the mood music is, and effectively then cash out and go work in the private sector and be able to explain that institution and be, you can say, our man who was with the central bank. He understands what it's like, and he understands that when they say X, they mean Y, and he has connections in that bank so that he understands the mentality, or he understands as I said a moment ago, the mood music of that institution. And this is everywhere in the private sector, of slightly older men, women, people who have been in government, who have been inside the institutions, who then sort of sell knowledge or understanding of how this institution functions and how it thinks. Because there is an institutional sort of culture sometimes, and it takes time and it takes years of sort of being inside of these institutions to understand how they function. This is a similar issue across the Atlantic in the US. If you look at the people, particularly in general counsel offices, heads of compliance, money laundering officers, people in risk departments, if you look at the CVs and the biographies of those people inside of the largest 10 American banks, overwhelmingly in those particular financial crime or risk functions, they come from government, US government mostly in that case, and they can explain and to their colleagues and read the ruins, so to speak, on what the US government means when it says something. So there's that element to it too.
Stephen, one last question. You mentioned earlier that there is some sort of innovation with regards to crypto having an impact on these issues with regards to sanctions legislation, etc. One of our previous guests was Martin Caraca, who is the founder of a stablecoin protocol, which basically means having dollars on a blockchain and having people being able to transact in dollars via crypto. What novelties do you see here? Do you think that the regulations and rules that are in place for large banks also apply or are enforced as rigorously in the whole crypto space? Or is that, as of right now, a bit of a blind spot where some activity gets through?
Good question. Now, I would direct your attention to the settlement agreement reached between the United States government and Binance. And by that, I mean, if you look at the agreement reached and you look at the agreement reached with banks like HSBC in the early 2010s, there are massive similarities. And effectively what you had then was some of these global banks, particularly those who did not have their headquarters in the United States, conducting activity which the US time and time again took exception to. They would then make a mistake, which brought them into the US jurisdiction undeniably. In the case of HSBC, it was money laundering for Mexican drug cartels through New York. And with that mistake, that egregious mistake, there is an entry point for the US system to get inside of your bank, inside of your institution. I have not looked through all of the details of Binance, but it seems to me that in the crypto space, we have about 10, 12 years later, a very, very similar situation occurring, which is now Binance has sort of been brought to heel. There is a monitorship, I believe, underway to monitor how Binance behaves. And as a result of that monitorship, They will be reporting back to the Department of Justice about what they're seeing to remediate Binance's behavior internally, to make sure that it's bring up to speed with US requirements on money laundering, sanctions, policies, procedures, all the sort of the dry technocratic nuts and bolts of being a good stand-up model member of the financial system. And then again, this idea of cascading expectations. Binance, every time it accepts clients or accepts transactions passing through its system, will pass on those expectations. And where it does not where it's not happy with activity coming through its platform, it will reject it. So Binance right now, as we speak, every day is performing presumably millions, potentially tens of millions of transactions, is disseminating those expectations. So people are being permitted in, if they are good financial citizens, into the system. Those who do not meet the standards are rejected. So that's sort of. I'm not one to wax on too long about crypto space, but I really see some strong parallels between Binance being kind of brought under control and some of these larger non-US financial institutions like BNP, Societe Generale, and HSBC about 10, 12 years ago.
All right, Stephen, thank you very much for your time and for this very interesting conversation.
Thank you for having me.